What's going on, traders? Hope everybody's having a great start to the month and a great week. My name is Shark. I want to do some analysis here on the futures markets, the S&P 500 ES, as well as the Nasty Nas NQ, the tech sector, going over the major markets there. We're going to take a look at some longer time frame charts. We're going to start off, since it is the beginning of the month, with the monthly chart. Take a look at the weekly, of course, daily, and then get a little bit more granular and take a look at some day trading levels as well. After we go through all that, I'm going to take a look at some of the other data points I like to look at that give me a broader perspective of the market and help me formulate a game plan for the next couple of weeks and some possible additional insights. So, reminder though that this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. So, it's a new month. I'm going to start this video off with the monthly chart on ES. And don't forget, it would mean a lot to me. It's free. Subscribe if you like the channel, if you like the information. Don't forget to leave a like on the video as well. It really means a lot to me. Let's break over that 2,000 subscriber mark. We are so close. Okay, so ES here. We're going to look at the SPOOS monthly chart. And last month, right, you can see we really did not go anywhere. In the last video, we did talk about the balance range that overall has been forming on these longer time frame charts. So we are stuck, right? And we are either distributing or reaccumulating here for the next move up higher. Now, it's been interesting. The bears have had a couple of opportunities here to push us lower and really have not been able to really find any foothold, even when the latest geopolitical news with the war in Iran came out. We ended up rallying right back once again after opening up the New York session down quite a bit. But you can see here really nothing on the monthly candle from February. We made a slighter low than the start of the year, but we still closed basically right next to it. And so far this month that we almost tapped that monthly 9-period moving average, but we did not tap it. Right now it's sitting at 6,700 basically, 6,701. And so sitting right there, definitely will pay attention to that area if we do come down into that whole number. That will be very interesting. But either way, we really have not been able to make a significant higher high or higher low here on the monthly. So until that happens, really, it's anybody's game right now. I will say though, from the start of the year, we've got our swing high. February slightly higher, and we just started the month, but March is a bit lower. So we do have some lower highs being put in the market, at least, although we have not, again, broken the structure to give me anything meaningful in one way or the other, right? We obviously need to see that displacement in either direction for us to get that true break and change of structure in the market. Okay, so let's go over to the weekly chart now and see what we can take away from that perspective. And probably more of the same, but maybe we'll get some defined range levels, which, honestly, I think I already have them. Let me take a look. Some supply and demand. I think we had them right here. Yep, okay, here we go. All right, so bring this down. Okay, now looking at this weekly chart on the SPOOS, and you can see here these pretty much are balance highs at the all-time high. I've got 70.15. All-time high was 70.43, but we have a couple of multiple highs here at this 715 area. So there we go, and we've got our equal low here. Slight look up below and fail here, and we did it again right here at the 67.65 area again here 2 times now. They had a chance to break it lower and not able to do it. So We still are underneath that weekly 9, sitting at 68.91, but we are just over, slightly over the weekly 20. So right now, again, still overall, we are just stuck. We could even see price get stuck even more in between the weekly 9 and 20, but hopefully that does not happen. As I was mentioning before, though, again, got our swing high, a little bit of lower, high, lower, high, lower. So we are technically in a little bit of a downtrend, but again, no displacement, no follow through yet for pushes. Where could we potentially head down, though? If we do find some acceptance right underneath the monthly lows, well, I'll probably look back to maybe even November potentially, and down by, what is this, 6,400 thereabouts. Maybe we just come into 660 area, somewhere in this general area or zone, I should say, for the potential downside target and maybe some potential longs. But certainly if we break below the weekly low and find acceptance underneath, what is this, from November 24th, that week, well, then we can look down a bit lower, down to the week of the beginning of October, the 6th, which is 50, what is this, 65.30s, and then even maybe down here all the way down at 65.25. So I would say probably about a 5-point little zone right there. It could be interesting to watch as well if we do really start to take out right this low right here. So, but that's neither here nor there. We will wait for some type of confirmation on the weekly before we start talking about that. Okay, let's take a peek at the daily chart. Probably just more of the same, but we'll definitely be able to see a little bit clearer these look below and fails again and again. The bears just dropping the ball, and it's really quite amazing to see how resilient the market is. I will say right here, on the daily, we do have a little bit of kind of a sell side curve trying to show itself here, and you can see, oh, it's the wrong one. You can see here we're kind of starting to roll down, right? Okay, so we're definitely watching that, and we could still bounce up here. We are under the yearly POC though, VPOC, excuse me, and that's sitting at, what is it, 69.05. So as long as we stay below that, still have some issues in my point of view for the bulls. However, just the fact that they keep on failing, I would say, isn't the best look overall. Still below the daily 9, 20, and 50 period moving average. That 50 EMA is pretty much lining up confluence with VPOC, with VPOC right around 6,900 as well, so just pay attention to that. But being below the 50 gives us a little bit more strength there for the bears. However, they just have not impressed me, failing this many times, trying to break below this balance range, which we have been stuck in forever. So 67, 65, here you can see it's really been a strong area for the bulls so far. Okay, let's take a look at some day trading levels here now on the SPOOs and see what we are looking at for the rest of the week. I do believe we have a non-farm payroll tomorrow coming out March 6th, the first Friday of every month. So that will be very, very important to watch. I believe that comes out at 8:30. So all eyes on the labor market tomorrow morning. Okay, so let's take a look at some day trading levels here that I will be watching on the SPOOs. And right now, let's just call out the bull side first, okay? So I want to see 60, 68, 35 right now as we trade down, getting pretty close to it, only 3 points away. Gotta see this area hold right here. Potential longs right here, actually, with about 4-point risk. but 68.35 needs to hold. We need bulls then up and over 68.47, and that goes up. We can probably come up, match these highs here at 68.50, but let's see some acceptance over 68.47. I mean, at that point we might as well call it 68.50. Let's see some acceptance over that. We can get up higher, about 8 points higher from there, give or take, into the 68.58, maybe 68.60 would be my next target for the bulls. We start hanging out over that and finding acceptance. Well, then we will try to see if we cannot trade back up and make our way back to the highs from right here, right around 68.75 thereabouts. And that's been a big area, as you can see here, multiple times. Here, this is also right before we broke down in a big old bear flag right here. So big area right in that zone, 68.75. Okay, so let's talk about the bears now, right? We need some acceptance underneath the 68.35. Do have, well, this is only a 5-minute chart here. Do have VPOC sitting at 68.32. So watch, we could also potentially sweep underneath that 68.35, come into VPOC, then push back up, recapture. I would be looking for that potentiality as well. But if all things being equal, underneath 68.35 can take us down about 10 more points. 68.25, we start breaking under that. Well, then things get a little bit more interesting. Kind of a similar scenario to the long setup here, where we just break right below that pivot. Down to 68, 68.21, just like here, how we broke just above the pivot into 68.50. But we break underneath, I would say, and accept under 68.25, and then we could certainly come back down, and I would look at these lows, this area right here. You can see multiple reactions right there as well. 68.13, 68.15, that area thereabouts. And here it looks like they are trying to break 68.35 as we speak. Okay, but underneath 68.13, well, we have 6800, 6802 would be my next level to look for a potential long trade. And that would be nice too, because, you know, here after we sold off, kind of chopped around and build out a little base right here, you can see this is pretty much the break of structures right in this general area here. So if we did see price come back in and retest right there, I like that potential for a long, and you know, you'd want to just retrace the steps back in that other direction going on those pivots. So but things really get interesting, I would say, under 68.90. Then we can go ahead and attack the lows from today's session once again, Thursday session, excuse me, from the 5th. So that's what I've got for the SPOOs. Let's move right along and get into NQ. Probably a lot of the same, so I'm not going to spend quite as much time on the longer time frame for the NAS. But let's see what we got. And we'll throw on the monthly. Okay, now in the last couple of videos as well, I believe we did talk about the overall, how the NQ tech sector was getting hit a bit harder than the S&P, and that still is true. Definitely a bit of an uglier chart, I would say, than the SPOOs. You can see a much clearer, and here we're on the monthly, but you can see a much clearer, I think. I mean, although we do have equal highs pretty much right here, it is just slightly lower, right? Just slightly lower. This one is markedly, February's trading is markedly lower, and the month of March, this monthly candle is a lot lower as well. As long as you can see here, we did not find acceptance over the 25, 158, 160 area. Would need to see some acceptance over that for the bulls to start to get going again. And honestly, it probably should be a little bit lower. Hold on. Okay, so 25.40. That's what I'll be watching. And I'm going to bring this down just a little bit to mark off the... because this is pretty much an equal low. And it's actually funny, it's the same thing. This is just slightly higher than our lowest low, and just like how this candle is slightly higher. There we go. 24,120, right? And that will be the month of, what is this, back in October. If we start to get under that low, that's when things really can get interesting to me. Of course, we'll be watching February's monthly low as well. But, and if we do find that acceptance underneath, well, what could we potentially look for? Well, probably back from September, the September lows, maybe 22,975 on the table potentially. Or maybe we want to come in and back test basically these equal highs from back in last year, and that is in December. So that could be interesting as well to see how that plays out. Still holding the monthly 20 though, excuse me, the monthly 9. So that is a good sign, at least on this point of view. We are a bit still oversold on this in the monthly, which we have been monitoring for the last few months. And really, nothing's changed yet, although we are starting to see some weakness. Nothing really showing, but when this does break, it will certainly give us quite the move, because it can't stay up here forever. Eventually, it will cool off a little bit, even if it's, just like in April. But you can see what even this type of small dip did in April compared to on the chart, right? So don't underestimate even how little this could go down, even though on the chart, since we're on the monthly, it can produce big moves. Okay, and you know what? I can just do it right here. Let's do that. Boom. All right, let's take a look at the weekly here. Okay, weekly. Oh, and this is interesting. Right now on the weekly chart, we are actually just banging up against the 20 on the weekly. So this is going to be interesting. 25, we'll call it 25.55. Still firmly below the daily 9, sitting at 25.185. Tried to get up there a couple of times and just has not been able to find acceptance, really. It keeps on getting stopped right here. And otherwise, same story as the SPOOs. I mean, from the bigger picture, right, we are just in a balanced price range, and until we see the displacement, all is for naught, and we're just trading in a boring old range. On which side will give up, that we do not know. Let's take a look at the daily. Okay, and here we are. All right, so we actually came into the 200 here a couple times. Interesting, sweeping it a few times, but very resilient, as I mentioned. Overall, even being the tech sector, we held that 200 perfectly here back in the beginning of February. But we are above the daily 9, slightly under the 20 and 50 as well here on the daily chart. So it is really, we can just get stuck up in this area. Let's see what happens with the job data. And we could just end up ripping. We are sitting at VPOC right now. I believe it's at 25.35. So we're about 50 points over VPOC on the daily chart. Let's see if that holds. And really, we would love to find that acceptance right over these lows right here. Here we had a little bit of look below and fail. But you can see this area, right? It's had a bunch of activity in it. So let's see if they are able to find some candles and accepting like so. And that can give us a little bit of a stronger bias to at least come and try to come up towards these other highs, and this would be a very interesting area right around here. What is this here? About 25,975 as a potentiality. But the first thing we'd want to see is maybe matching the high from the 24th and that last daily swing high. And then we can talk about getting over from there, because we do have, that's a big spot as well, as you can see right here, back testing, and that's where it failed. So, all right, let's get into some day trading levels here for the NASDAQ 100. Oh, wrong one. Okay, here we go. All right, so for the bulls, we've got to see them. Oh, same number. Got to see 25, 35, hold. But we need up and over 25, 100, 105, right? Get back over there. Then we can start looking for trades back up into the 145 here, and then ultimately 170. And that would be the potential for a nice put short. And you can see here we've had some issues. I don't have a level up in this area. It's a little bit closer to the 25 119 area, 120, but I would be, I don't know if I would be interested in shorting that. Potentially yes, but I certainly would like a look above and fail setup, just like we had here, where it peaks its head back up over 125 170 and then falls back below for lower prices, and then right back down to the 135. All right, what do the bears want? Right, they want to break under 25,035. If they are able to do that, back down to 2,500, underneath 2,500, 980 breaks. Okay, then we can really see some fun. Back down another 50 points or so, 60 points, 24,930 would be my next spot. And that starts to break, well, then we're going to be coming right back into that balance area, just like in the SPOOs. Here was the break of structure, 24,870, and that's a potential long spot that I'd be interested in. 24,830, 930, also potential long spot I'd be interested in as well. But we're talking about the shorts here, so that would obviously be a, as a PT for the shorts if you were short and come bringing it down. Either way, 24,870 interesting for me as a short target, and also a potential long break back under 815, 24,817, 815, and then back towards the Thursday lows. And underneath, we'd have to break underneath 24,760, and then, well, we'll probably match the lows from, this looks like Wednesday in the morning, close down to 24,725, 24,700, somewhere in that range would be my guess, if we are able to find some acceptance. So probably another 60, 55 points or so down lower if we break this last Thursday low. Check out the lows from over here. Okay, there we go. We are done with the major markets that I like to look at. Let's take a look at some of the outside data points, see what we can take away from that perspective, if we gain any insights, find any divergences that might be interesting. Let's take a look at breadth here. We're going to look at the S&P 500, the SPX A50R. Okay, this is just simply how many stocks in the S&P are trading over their 50-period moving average, and we are really seeing some weakness come in overall in the breadth, and we're really close to that 50% marker, right? So that's usually my gauge for the market. If we start to get underneath that 50% marker, well, then market breadth has flipped a little bit more to that bearish side, and then we can look to see more selling pressure potentially come in. But as long as it holds that 50%, okay, everything is good here. A lot slower moving here on the bottom is that how many stocks are trading over the 200. A lot slower moving, so I don't watch it quite as much, but I still have it up. And we're at 58% right now, not even close to 50, so that really is no concern. I would say that this is the immediate concern, of course, here on the slower moving average, coming into that 50% area. New highs versus new lows, another breadth metric I like to look at, and we're right at the zero line, right? Markets overall, as we had already mentioned, stuck in a balance. We are not below zero though, very close, might as well be zero. Start to get readings underneath zero. Again, more selling pressure, watch for more weakness in the market, but right now it's holding on by a thread. All right, HYG, take a look at the junk bonds here. What are they showing us? No divergences, down, down. I mean, maybe we have the swing low and the higher low here, but from what I gather, everything, no divergence there really sticking out to me. And I'm going to actually duplicate this and just throw that right there. Okay. Keep it moving right along here. Let's take a look at the bond market. Now, I have not, oh yes, now I have not posted this yet. We had the bonds down here, but I did notice this. Look above and fail across the spectrum here on every single bond. Okay, looked above, broke down, back in this balance, and now it seems to me that this is going to come down lower on the shorter end of the curve here, or the shorter end of the bonds, excuse me, and just extend this a little bit. So watch for this to come down and yields to come up higher. Same thing here on the 7 to 10 year. Boom, and back down. So watch for yields, TNX to go up higher. This could come down to 96. Gosh, the TLT was really pushing up, really looking good. Going all the way back down. Let's see what happens if it retests 88.40 right here. Same thing as the SPOOs, right? Couldn't get over, couldn't get over, couldn't get over. This is the break of structure area. Maybe here in 88.40 could be a pickup spot for the TLT to see if we can come back up higher on that direction. So that is interesting. Taking a look at credit spreads and the bond ratios of credit spreads signaling risk on right now over that 50 period moving average, and it is starting to creep up. So this is risk off right there. So we'd want to see that below. I'm trying to move it. We'd want to see this below. Right, bond ratios here, coming up, coming up, coming up. Okay, so watch to see when these ratios come and back test the 50 here. This is where I'd be thinking, okay, let's see if that lines up with that 88.50 area on the TLT, because this is where you might get that long. This comes up, touches the 50, and it starts to roll back over. And I'm really watching bonds. Gold has really made a nice recovery since the huge sell-off. Silver, it's struggling a bit more. More structural damage was done to that chart on the daily and weekly, but I'm going to watch very closely here how this reacts as it comes up into it, because yields are definitely going to be affecting the metals prices. But I also want to see if, from the flight to safety kind of perspective, I was kind of looking to see if bonds might be a new narrative here coming in, and if this comes up and bounces, as long as this is under the 50, we should be, along with these ratios is under the 50, the orange line, we should be bullish on bonds and look for the TNX to roll over. But it's not quite there yet, as you can see, but it's getting very close. Just like on all those bond charts, we weren't quite there to their support yet, but probably soon, and I wouldn't be surprised to see that line up. All right, speaking of gold, let's take a look at gold and the dollar. Dollar has been moving up higher, kissing 100. Now, we, obviously had this huge sell-off right here. Now we're starting to come back up just slightly above the daily 9. Let's start to see some acceptance again over 51 15, I will like this a little bit better, but yeah, we're still 26 points above the 20 and above the 50 still. And so this probably, I mean, I'm bullish on gold, so we'll see what happens. I do have a bit of a uptrend right here, to watch right now. I'm wondering too, do we kind of like set up in a go sideways and kind of ascending triangle and rip back towards the highs? Maybe. Either way, you can just also put in a trend line kind of right in this area. It's pretty clear here. If we start to break, then you can look to lower. If as long as we hold, we'll look to higher prices, right? So there you go. The dollar, boom, coming off, but having an issue right around the 100. So let's see if this starts to drop, but some strength there in the dollar, much to probably Trump's chagrin. And I thought, do I have it on another chart on the dollar? Thought I did. Oh, okay. Well, let's take a look at it. Take a look at the TNX here, because there's another Dixie chart I wanted to look at. Okay, so here, the 10-year yield, boom, you can see it rallying, rallying, rallying. Let's see what happens. It seems to me, I mean, as long as it holds 4.1, right, 41, it could come back up into the 42. Let's see, this gets to 42. The bond spreads get to, the bond ratios, get back test that 50. This back test 42. TLT comes into that 81.50 or 81.40, and then we see this reject, and then we see bonds head back up. That could be the potential trade right there. Dollar right around the 100, as we mentioned, having some issues, 99.30, but a pretty good rally from off the lows from the 96s right here, and then just continued to rally up. Bulls want over 100, I guess, really ideally for the psychological, but let's see some daily closes over 99.40, and that at least would set it up to come at least back to this high here from this a couple of days ago. I personally think we'll see this sell down. No real short on the dollar until though we break under and hold under 98.60, and then we can look down for 98.15 thereabouts, 97, 91 area. Come back and retest this zone right here. Let's take a look at the put call ratio. Nothing really sticking out to me there. Anything with the skew, just take a look. Probably popping up a little bit. Yeah, okay. So those longer dated puts kind of starting to pile in a little bit. Inverted ZT, so we don't have to look at the Fed tracker. Kind of pushing up. Higher this goes, less chances of cuts. It's probably also bounced because of the oil volatility that we've been seeing because of the war in Iran pushing up here. Wanted to show you guys the oil volatility. We were talking probably, maybe it was for a month, or maybe I'm not exactly sure when I started looking at this, but a twofold kind of thing here. Yes, obviously we had the war, as I mentioned, as everybody knows, but we were watching kind of this base build out here in these 26s on the oil volatility. I also was of the mindset that the money moving into gold and silver was also going to start to distribute more into other commodities. So that would not be good for inflation. This oil push is not good for inflation. But we definitely, that's kind of a little bit of that oil thesis thing. I don't know if you want to call it lucky, but then obviously we had the geopolitical stuff really causing this oil volatility to spike. Oil is notorious for rallying and fading, though, so I don't know how much I trust it, to be honest. Actually, I was thinking when I looked at this today that it was going to be back below 72. for the oil volatility, but no, alas, we are still up. And what is oil trading at right now? I think it's what, 92 a barrel, I believe. I could jump back into the charts really quickly. I think it's 92 or 93. Oh, shoot, it's even higher than that. 96. Yeah, I mean, it almost hit 100 a barrel. We'll see. I mean, you know, this is all geopolitical, but you could even see the chart here on oil, how it was really setting up for a nice move, and then we got a break of this triangle. And let's actually, let's do 5-year weekly just to take a look here. Oh, look at that. A couple of look below and fail fake outs here, but finally, kaboom, took out this high. So let's see. Gotta pretty much stay probably bullish overall on oil as long as this holds here. 87.90. Don't want to see it fall below that. And as long as it doesn't, could look for a potential. If you're interested in that trade, longs back up there. Maybe it comes just to here. I don't know, but that's the possibility. If that doesn't work, you know, we'd probably more look for a BRB. Come back, retest the trend line, then at least we can get a scale off right here. Wait to see if it breaks back over. Get another scale there, and if it breaks over, and see something like that. And then come back and match the high. Okay, back to the other charts. All right, so we'll be watching that closely. And what else is going on here? I doubt the yield curve did anything. Let's take a look at, I want to take a look at the real yields. Mind the 20-year. Okay. That stocks are cheap. And real yield coming down. Can I tell? Yeah, just a little bit. Okay, I think that's everything. Oh, well, I forgot to look at VIX. Let's look at VIX. More of the volatility stuff. Okay, last thing. All right, let's start off with the normal VIX. Take a look here. Now, as long as we hold 19, for me, no issues. We didn't even really get there. Look below a little bit, but recaptured. Back up. Let's hold over 22. 23 over 23.45. We'll come back up to 24. 80. Maybe we hit 25, which is probably right here. And then if it gets over that, we'll look for those November highs up at 26. But yeah, we might get stuck in here. I love this high VIX. So I mean, if we hang out here, I'd love to see that. Either way, we could hang out here and maybe even come up and then we see a spike again like that. I don't know, but either way, as long as we hold this general area, volatility should stay cooking. Okay, 1-day VIX. Let's see if it gets over the 17. We held 100, held 105, 103, kind of those areas what we've talked about ad nauseum. Kind of stuck here over 117 half, and see more volatility come in. 1-day VIX. Well, we're both at some really kind of resistances here, right? 23.45, 117 half. 2160 here. All big resistances for VIX coming into data. Interesting here though, when we look at the VIX future spread, okay, we are in backwardation now. No more contango, a lot of risk on the table, so this is not a favorable environment for risk on and for funds and institutions to be allocating a lot of money. This makes sense, obviously, with the geopolitical turmoil right now. Okay, I feel like I'm missing something, or we just did a really great job of going through everything in a concise manner. Again, my name is Shark. I hope you enjoyed the video. Don't forget, if you haven't already, subscribe, like the video. It means a lot to me. It's free. Really appreciate that. And if you have any questions, thoughts, comment below. Let me know what you think. And again, I hope you enjoyed the video. Remember how we close out every video here. A prepared trader is a profitable trader. So let's plan those trades and let's trade our plans. Wishing everybody a beautiful week or two until we do the next update, and keeping an eye on everything in the Middle East. And take care and happy trading.